Jeff Lewis, Global Market Strategist at JPMorgan Asset Management, joins us on the show right now. Jeff, let's talk about the Indian market. I mean, the Indian market is nearing all-time highs. Do you see FII flows into the Indian markets continue in the coming weeks, propelling the markets to make new highs?
I think foreign institutional investor inflows will continue to be a supportive factor. Even at the height of India's macroeconomic worries and policy paralysis in 2011, on a calendar year basis, the amount of money that flew out of India was very, very small. So it seems to us that the FII money coming into India is basically fairly sticky, and that foreign institutional investors are looking to India more for the longer term, more for the secular growth story. Recently, year to date, something like 10 billion US had come into India, and for the rest of Asia, ex-Japan, net it was zero. So the share of money at the margin coming into India has never been greater. So that seems to me to be a vote of confidence by foreign investors in the secular Indian growth story.
Jeff, Reserve Bank of India has been cautious towards cutting rates, but banking stocks are still seeing continuous buying. What is your view on financials in India, and do you see this side of market continue to remain FII favorite?
Well, we don't think the case for Indian financials rests primarily on Indian monetary policy and a rate-cutting cycle. We think it is possible that we might see one or possibly even two more 25 basis cuts from the Reserve Bank of India during the course of the year. That will be conditional, I think, on the inflation numbers staying fairly well behaved at the margin. For Indian financials, really it's the financial deepening, it's the possibility of faster growth in credit in an emerging market like India than you would get in a developed economy. These are the things which are attracting India to the financial sector. It's also a beneficiary, obviously, of consumer spending and of a domestic-oriented economy. So we can find a lot of stocks that we like, particularly the private sector banks, also the mortgage providers, and some of the providers of finance to infrastructure.
How do you see the consumption theme in India pan out over the next few months? Auto sales have been sluggish, but deals like Unilever's indicate that there is still significant interest among foreigners about participating in the larger consumption theme in India.
Yes, I think foreign investors are very interested in the consumer story in India. Consumption has slowed, but it has lagged, and it has been dragged down by the sharp deceleration in fixed investment capex spending, so it will probably only recover its full strength when the Indian economy overall is performing strongly again. But we are seeing signs that the worst is behind us in terms of the growth slowdown. We're seeing quite robust real wage growth from the rural economy. We're seeing signs of productivity improvements that arise from the spread of rural transport system, rural roads, electrification, etc. And this seems to be very positive for the consumer story with regard to staples, with regard to basic products purchased by rural households also. So I think you have two different consumer stories in India.
China continues to remain on a sluggish wicket on growth, and even the PMI data, which is an indication of how the underlying economy is doing, has contracted. So what does the fall in China mean for a market like India? And at a time when the Chinese economy is contracting, do you think it's time to avoid commodities?
Well, we've seen commodities weaken over the last 12 months, particularly in the industrial materials, in the industrial metals. And I think there are supply-side factors. We are seeing increased supply at the margin in some areas as well. So I wouldn't be too bullish that we're going to see a strong rebound in commodities, but for manufacturing-based economies like the Asian economies, that surely is a net plus. Asia does not really benefit as a whole when commodity prices are rising sharply, in particular India. So I think the fact that the outlook for commodity prices is relatively weak and we don't expect a sharp rebound is probably a positive for the Indian economy.
What's your view on the reform momentum in India? Do you see the momentum continue even when we are looking at elections 1 year from now?
Well, I think once you get into the election campaign period, and that's probably the 6 months before, then it will be asking too much of governments to introduce new policies at that point in time. And probably it's the electorate, the voters, would not wish to see that. They wish to have their voice heard in the election results, and then you'll get a new government. And I think foreign investors are relatively relaxed about the main opposition, about the choices that India faces, because we think that either a Congress-led a United Progressive Alliance or a BJP-led government would both actually pursue reforms which, whilst they differed in detail, would overall be market-friendly and reform-friendly.
By when are you estimating inflation to ease meaningfully here in India, assuming there is a normal monsoon this time around and global commodities cool off?
Well, on the commodity front, I think things are looking reasonable. There are no strong pressures, and we've had some reasonable harvests for most of the main food crops, so we'll keep our fingers crossed with the monsoon. As to inflation, it did become embedded. It is still quite a problem with regard to consumer inflation expectations. I think foreign investors would like to get some explanation from the Reserve Bank of India why there is this big divergence between wholesale price inflation and consumer price inflation, and what the central bank's views are on that, and why it is still targeting the WPI. We know it's a different problem for them, but we'd like to see them face up to that problem, I think, and they would get a lot of credit for doing that, although politically it's probably too much to expect a change in the central bank's target ahead of the upcoming election.
Right, Jeff, really appreciate your time and thank you for your valuable insights.